Yo, what's up, guys? Wise out here, coming to talk to you guys again today about something pretty cool. Stocks, right? But before I get into stocks and talk about the market and whatnot, I want to let you guys know if you're new to go ahead and hit that subscribe button. And at the end of this video, if you feel like you got some value from it, go ahead and hit that like button and even drop a comment. All right. So check this out, stocks. I get this question a lot. People always want to know, what should I be invested in? Should I be invested in stocks? Should I be invested in real estate? Where should I put my money? Okay. I'll be honest with you. One of the best places to put your money, and I'm not just saying this because I do real estate, is always going to be real estate. Okay, because it's in terms of in terms of ROI and in terms of risk reward, real estate is a great place. Now, I'm not knocking stocks because trust me, my senior year in high school, I was super big. Economics. That was like the only class with senioritis that I actually got a decent graded. So I definitely am aware of Wall Street, and I think it's a great thing. There's a lot of people who have their opinions about it and whatnot, but I think obviously it does serve a purpose. Now, where I honestly think how you should be looking at it is, I hate to use the term diversity because I think what is it, Warren Buffett, he has a saying, diversification is basically for the ignorant, right? So I hate to use the word diversity, but I want to say, I guess another word would be just how I like to say it, just have my foot in a different pond. That's all I said. Put my feet in a different pond. You want to make sure you have your feet in different ponds because not necessarily to say unless one dries up or one goes away. It's just you want to just mix it up and change it up. Be fun a little bit, um, and really there's nothing wrong with stocks. I think honestly, it's just if you're buying them, you better know what you're buying. And essentially, instead of looking at it like a ticker symbol, you got to look at it as if you're actually going to be buying a company, right? So that's how most people kind of look at it, and most people tend to want to go for those blue chip stocks. So like the Apples, the Googles, those major companies. They like to buy those stocks, and the Nikes. They like to buy those major stocks and then hold them and then hope and pray that the company does well because they are legitimate companies and they'll make money in the long run. Um, it just depends on how much money you have to put into it. I honestly don't think for most people that that's going to be the best way to invest in the market. I honestly think that a better strategy is going to be to invest in, and I hate to say it because there is a lot of negativity around it, but I think it's way better to invest in things that are volatile. So like penny stocks, things of that nature, where and mind you, it's literally it's going to become a job, and it's really risky. I'm not saying you should go out and do it, but I'm just saying from my opinion. I think that if I were to be putting my money in the market, it would definitely be with those smaller cap companies to where there is that volatility and you can basically make your money on the small day-to-day price action changes. So honestly, I think that's where you might see some some good results. Or if you got a lot of money, and go and dump your money into some preferred stocks, where you're getting a dividend, you're getting a return, right? I think that and again, they're going to be low returns. Okay, especially with preferred stocks. And even if you have large amounts of money, um, yeah, it just depends on what your needs are in terms of your investing. But I honestly think that the best place to see results right away to put your money, and I hate to say it, but it's going to be like those penny stocks, because there's a lot of like negativity surrounding it. But I would actually put my money there. Okay, now that is going to be stuff that's high risk. Okay, so high risk, how much of your capital should you allocate towards that? So let's say, for an example, you have $100,000 that you want to invest. How much of that $100,000 should you put towards high risk investments, high risk investments or low risk investments? I honestly, depending on what stage of my life or depending on what stage of your life you're at, you want to assess your strategy. So if you're older, you kind of want to tend to stay away from the stuff that's higher risk. You want to go for the low risk. If you're younger, your risk tolerance is going to be way higher. You want to go for the stuff that's higher risk. Now, what you should be doing is, if you're younger, not reinvesting your money in high risk investments. What you want to do is take that money and dump it into low risk investments like real estate, because what that's going to do is that's going to build an income for you. And I always talk about how extremely important that is to build passive income, so that way you don't have to work for the rest of your life and you can become financially free. That is a great way to do it. So when you're young, you want to go into those high risk investments. So I'm talking about, even things like, there's a lot of negativity again around this too, but Bitcoin, that's something that I'm definitely going to be dabbling in. Okay, Bitcoin is doing real well right now. And just some of those, like, penny stocks and whatnot, stuff that is high risk. Like, dude, if you screw up, you'll lose your shirt. Like that kind of stuff. You want to have, I'd say, if percentage wise, um, I'd say about 25%. Okay, and the reason why I like to do that is because 25% is a quarter, right? So I'd say I would literally put about no more than a quarter in the high risk investments at a time. At a time. Now, not saying overall, I'm just saying at a time. Like I wouldn't have more than a quarter in at a time. Okay. And the reason being is because you can literally lose everything. So it's like, why, risk it all on something that can go wrong? It doesn't make any sense. So where I don't even question and think to put money is in low risk investments, and that's real estate, right? Like I don't even think to put money in real estate. If it's like, if that's a good deal for me, I know location is the important thing that you always want to focus on, is the location and the amount of land you're getting, right? And where that land is located within, let's say for a street example, like a corner lot versus, a lot that's in the center or two, three lots away from the end. You want to make sure, and it really boils down to location, that you're getting it in the right location, and you don't even have to think, right? You just dump the money, and like they say, real estate is almost like a dumb man's game, because you don't even have to think. It's so low risk. Everybody needs a place to live. It's so easy to do. So that's kind of where I don't even think, and I always have a larger portion of my portfolio allocated towards that, right? So it's like taking 25% at a time and dumping it in the high risk, taking it out and putting it in the low risk. So I'm taking out literally everything. So I'm not even investing the profit back into the high risk investment, simply because I know that you can literally lose it all. So it was like, what was the point in the beginning if you're gonna, put it back and then lose it? So it's like you just take it all out, dump it into something that's low risk, and then start over. So GC talks about that a lot, right? Staying broke, right? Taking, building up, putting money aside, building it up in an account, and then shoving it and pushing it towards something major, going all in, and then, just kind of starting all over. So that's taking a little piece of that and, making that my own. That's what you basically want to do, is take a certain percentage of it, dump it over there, and then just start over from scratch. Okay, so that's going to be really it for it. I'm not really an expert on stocks. I just am just giving you my perspective on it. Okay, but yeah, definitely look into some of those high risk investments. I know, like I said, there is a lot of negativity surrounding them, but if you're younger, it makes sense to get in on those high risk investments. If you're older, you kind of want to tend to stay away from them and focus on lower risk investments like real estate and whatnot. Okay, so that's going to be it for this one, you guys. Like I said, go ahead and hit that like button if you feel like you got some value from this. Subscribe if you're not already, and we'll see you on the next one. Much peace, much love.